Shares of Hims & Hers have been on an absolute tear, up almost 300% over the past year and up 48% just over the past month. Now, normally when a stock goes on this kind of run, it means that shares have gotten really expensive, but that's not the case with Hims & Hers. Let me just give some numbers behind this. Enterprise value to sales on a trailing basis, 3.9. You can find a lot of technology companies out there today that are trading in excess of 10 times sales. And there's still a lot of growth ahead. Analysts are expecting 52% growth over the next 2 years, and that may be underestimating the company's growth rate. So even after this hot run for Hims & Hers, is there still value left in the stock? I think there is, especially if you take a long-term view of this company. But let's dig into the numbers. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at a couple of charts that just show the momentum that Hims & Hers has. The first is just trailing 12-month revenue and net income. And this just gives an overview of the company, shows how quickly revenue is growing. Since the end of 2021, the compound annual growth rate of revenue is 74%, just a phenomenal growth rate. And Hims & Hers is now profitable. And that profit is because of consistent improvement in margins. Gross margins are maintaining relatively high, right around 80%, but operating margins, we're starting to now see operating leverage in the business. This is exactly what you want to see from Hims & Hers business model. Now 5.6% in the most recent quarter. We now have 4 straight quarters of positive operating margins. So that's what you want to see from a platform company like Hims & Hers. And this is where I think the market is really getting Hims & Hers wrong in a lot of ways with the focus on GLP-1s. Hims & Hers as a company is a platform. It is connecting users or customers with services and prescriptions, and it's adding value by finding the things that are right for you, personalizing those, and then adding the number of services and products that it can add, that it can provide over time. So right now, those main products are ED, hair loss, and weight loss. In the future, there are hormone treatments, menopause, a lot of other things that Hims & Hers is working on. But the attention of the market over the past couple of months has really been about GLP-1s. That was excitement in June when the company announced they were going to be providing compounded GLP-1s. And then some of that excitement faded in the fall when it was found out that some of the GLP-1s are starting to come off shortage. That shortage is really when branded medications like GLP-1s are on shortage. It means that compounding pharmacies, which is what Hims & Hers owns now, can produce a similar product. So semaglutide is what they're making in this case right now. And they can sell that to customers without going through the branded product. That's why Hims & Hers product is so much cheaper than competing branded GLP-1 products. It's likely that that shortage is not going to last forever, may not even last for the next few months. So that's the concern that investors have had. But if you actually dig into what management said on the conference call, what they reported in the numbers, GLP-1s are not the driver of this business. And this is where I think the market really got things wrong. And the reason that I think there's still value in this stock today, given the relatively low price to sales multiple and the operating leverage we're starting to see in the business. So let's go through some of those details. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. When you look at Hims & Hers third quarter results, you see 77% growth to $401.6 million. Adjusted EBITDA up 317% from a year ago to $51.1 million. This must be driven by GLP-1s, right? That would be the narrative that the market seems to have on its mind right now. But management gave some details that showed that GLP-1s are still a relatively small piece of the business. This is the couple of lines right here. Subscriber growth remains strong with total subscribers in the third quarter growing 44% year over year. Equally exciting is that subscriber growth in offerings outside of GLP-1s remains strong at approximately 40% year over year. So GLP-1s are providing growth, but they're not providing the majority of the growth in subscriptions for Hims & Hers. What is providing growth? What is providing value? I think these personalizations is really the thing that we need to understand as investors. These are going to be the products that Hims & Hers isn't necessarily just pulling off the shelf for somebody. They're actually making something personalized for them. So it's a personalized dosage, it's a personalized mixture. These are the touches that you just don't get from a traditional doctor-pharmacy relationship. Even with something like GLP-1s, Hims & Hers talked about this on the conference call, that they're able to provide more personalized solutions than most customers get because they have more touch points, because they are a digital solution. You can ask questions on the app. There's an asymmetry to that. A doctor who is working with you can answer at any time. They don't have to be in the office to answer your phone call. So that relationship actually improves the care, improves the value of that personalization. And more than half of their products and their subscribers are now personalized products. So this is exactly what you want to see. So why am I not particularly worried about the GLP-1s and losing those products right now? It's because of everything that Hims and Hers is doing. They can make different form factors for customers. I don't like taking pills, so they could offer a solution that isn't taking a pill. I've never gotten that option from a traditional pharmacy. Personalization, so we talked about that. The options that they can provide, personalizing those treatments, generically available GLP-1s, branded medications. And they say that, quiet part out loud here, when supply is available, we expect to offer access to branded medications such as Wegovy, Ozempic, as well as Mounjaro and Zepbound on our platform. This is a platform. They are happy to sell branded medications if they're not able to sell the compounded medications. The reason you would want to sell the compounded version is because it's cheaper, more readily available, and that was a way into the market. When those branded medications become available, Hims and Hers is happy to sell them and say, hey, you know what? Instead of $200 a month, it's now going to be $1,000, $1,500 a month. That's just the reality of that business. Much, much more expensive with those branded solutions, but they can definitely be sold on the Hims and Hers platform. So Hims and Hers stock has been on fire so far this year, but that doesn't mean the momentum is ending for the company. And one of the reasons is fourth quarter, they're expecting 89 to 91% revenue growth. On top of that, they're expecting adjusted EBITDA margins to be 11 to 12%. So you're starting to see that operating leverage in the business as you build out a platform like this. What you should see is that you spend a whole bunch of money building the platform, so building the tools that you need to provide these subscriptions, to buy the pharmacies, and then also to acquire customers. And eventually, the return on each of those customers, if there's a positive long-term value from each of those customers, those long-term values start stacking on top of each other, and you're not building the platform each time you go out and reach a new customer. That platform already exists. So that's where you get the operating leverage from a software business like this, a digital business like this. And that's what I think we're starting to see kick in for Hims and Hers. The market has been focused on GLP-1s and GLP-1s specifically, but a lot of the conference call focused on the fact that this is not a GLP-1 driven business. There are going to be multiple products that they're going to introduce over the next couple of years that will increase the number of offerings that they're going to be able to bring to customers, increase the customer base that they're going to be able to reach. And particularly, it sounds like more women as they build out the Hers brand. And all of these things will drive growth. This is still a relatively small business when compared to the around $500 billion that's spent on pharmaceuticals in the US alone. So I think there's a ton of growth runway for Hims and Hers. This is just a better solution. Yes, there is competition in the market. That is something that's worth watching. But when you see growth rates of 70, 80, 90% and margin expansion at the same time, and we're having customers that are sticky, 85% retention rate, these are all really good signs for Hims and Hers. Everything is moving in the right direction. I think that's why the market is finally reacting. And despite the fact that I sometimes get more uncomfortable when stocks rise as quickly as Hims and Hers has, the stock is not expensive by most metrics. So we could see those multiples rise even as revenue rises at a really rapid rate. So hopefully that puts some context to where Hims and Hers stands today. Stock has been absolutely on fire over the past year. Let me know what you think about the stock. And are you a shareholder today? Put those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.